Hello and welcome to this edition of Closing Trades. The choppiness for the markets continues and it's nothing different today either. You started off quiet, had a few jagged edges, flipped and flopped, got pretty close to that 23,600 level. And then from there, you've again seen a bit of a comeback. From the day's highs, of course, the fall is what you can see on your screens. The Nifty bank, though, hasn't seen much of a resurrection. At the session lows also, it was down about 1.5%, and from there, it's not recovered a whole lot as we speak. Yes, the one stock which has managed to single-handedly pull up the Nifty has been Reliance Industries, currently sitting at a gain of about 2.25% in the futures. A good 24-point bump up is what you're seeing in the cash markets as well. Other than that, of course, ONGC, after those brokerage upgrades kicking in, that's one stock yesterday and today holding up very, very smartly. ITC2, 1.6% higher there. There's Bharti Airtel. TCS ahead of its numbers tomorrow, although post-market hours, 1% higher for that stock as well. And Axis, HCL Technologies, Bajaj Finance, these are some of the blue chips which are actually holding out in trade. But on the flip side, what continues to put pressure, Trent, that's still seeing some weakness, about 3% of a loss coming in on that stock. SBI, Kotak, Infosys and HDFC Bank, which also continues to reel under pressure, still down about almost 1%. So not quite out of the woods in that sense. Within the broader end of the market, it is the declines which are taking over still. UBL, we'll talk about the news factor there. It slipped about almost 4.5%. Kalyan Jewellers has been a laggard from the word go. A 4% loss coming in there. Policy Bazaar, Paytm, Dixon, these are all stocks which are seeing some huge selling coming in. On the flip side, Poonawalla FinCorp, GAIL, Oil India, LTF, these are some of the gainers in trade. But Shrishti, before we take it across to our experts, what about the newsmakers?
Well, certainly, Aisha, a lot of these newsmakers have also come in. Firstly, let's put the spotlight on UBL, what that stock is doing, because just a while back, there was indeed a news flow that was coming in where the company did say that they have suspended the supply of the beer to Telangana beverages. And since the Telangana has not revised the beer price since FY20, the company was seen to be taking a hit, and there was even a supply that was supply suspension has actually put a pressure on this particular stock as well. And the last data that we have during the earnings call, the company did say that the overdues were actually over 900 crores. The latest figure is definitely not available, and that stock is actually seeing a sharp knock of around 5%. In the news, there's indeed Paytm as well, wherein UBS has come out with a note where they are highlighting that Paytm, after given the RBI approval to actually go ahead and add the monthly transacting users, has not gained significant market share on that particular front, and the numbers of MTUs actually stand quite stagnant, and that stock is also seen to be having no recovery throughout the day. Other than that, if we look at there's no significant newsmaker, Aisha, as per se, but I believe that it's the oil and gas space that is doing pretty well today. We have talked about Reliance, but other than that, in the last half an hour or so, it's stocks like ONGC as well as BPCL, HPCL, they are doing pretty well. As we all are aware that given the Q3 earnings, this time the earnings from OMCs are expected to be a little better, and in the global markets as well, we are seeing a bit of an up move when it comes to the crude oil prices. So we believe that that is boding well for all these companies. So a little bit of sector churning is what we are seeing, but indeed IT is taking a back seat even as of now.
Oh yeah, absolutely. And those brokerage upgrades, I guess, worked well for Reliance. A clear valuation play there, given that Reliance valuations are currently the cheapest since the COVID shock, which was back in March 2020. Let's welcome on board then Kunal and Naresh and find out what they're making of the markets right now. Kunal, a fair amount of volatility. Even though we've recovered from the session lows, what's the screen telling you?
Yeah, it's been a bit all over the place, frankly, because, in the initial part, the markets were trading with a bit of a flattish bias in the mid-session. We, cracked quite hard on the indices. The Bank Nifty, I think, at one point was down some 750, 800 points. But then again, in the last half an hour, last 1 hour, we've seen a good recovery. So I think it's been all over the place, frankly. But, all we have to look out for now is, the broader signs where the indices are, heading towards, and, what kind of levels the indices are breaching. We're still trading into a zone where 23,800 on the upside remains to be a resistance for the index. There have been multiple attempts for the index to try and claw back about that 23,750-800 mark, but it's unable to surpass about those levels. And on the downside, 23,500 has been acting as a support. In fact, even on an intraday basis, we managed to just about retest that 23,500 500 short levels on the spot basis, and we managed to bounce back. So which means that the markets are now getting back into a very tight range. So it's it's more of a wait and watch. If we break below 23,500 mark, that's where I would believe that we may probably get another 200 to 300 points on the downside on an immediate basis. But if we scale past about 23,800 levels, I think the tides could turn for the indices, and you could probably have a much more stronger relief rally, especially in the broader markets and the large cap names.
All right, that's the take coming in for the benchmark indices. But Naresh, help us with your take on the oil and gas space as well. Any stock that is looking attractive to you? Because ONGC is definitely one of the winners there. Just yesterday, we had that upgrade coming in from CLSA, and second day on the trot. Look at the move coming in on this counter. So help us with your take on ONGC. Where do you see the stock headed? And apart from that, any other stock that is looking attractive?
So the whole basket looks interesting. ONGC has made a sharp comeback if you look at it. Stock from 230 odd levels has come up to 270. Now 260 could be a good entry point on dips to 60-65 zone. Good bottoming out formation done over there. And the other names also, Reliance Industries is still down 10% from the election day lows, 22% from the all-time highs. So that could also make a bounce back towards the 1350 mark. GAIL India has corrected. Even the OMCs have corrected 15-20% from the top, can make a bounce back. So as a basket, continue like the whole oil and gas sector as such.
Okay, let me welcome on board Varun Saboo as well and find out what he's making of the market. Varun, clearly what's popping out in trade is Reliance. Are you in lieu or rather in tandem with the brokerages? Given that it seems like a great valuation play for sure, the valuation's cheapest since COVID lows.
Yeah, hi, ET team. Thanks again for inviting us on your show. Last time when I was on your show, I mentioned that we are extremely positive on Reliance. And I would like to reiterate the same, that Reliance stands to be a very interesting bet here. There have been good correction here. Absolutely. I agree with you on the point that valuations have become very attractive out here. And all businesses have been doing fine. So I don't see any reason why Reliance should be here. And we remain quite optimistic on it.
Well, the one stock which has been cracking pretty hard, of course, is UBL, given that Telangana is UBL's largest market in terms of volumes and consumption. So that stock definitely taking quite a bit of knock. Given that the news flow on this one has been quite bleak, the company, remember, has decided to suspend the supply of its beer to Telangana Beverages Corporation Limited, that's TGBCL, with immediate effect, the rationale being that TGBCL has not revised the basic price of the company's beer since 2019-2020, resulting in huge losses in the state, and significant overdues are remaining unpaid by TGBCL for the past supply of beer by the company. And given that this is their largest market, you're seeing quite a bit of hit come in on UBL. Kunal, analyze the Alco-Bev space for you. I know it's not UBL, but Radico, which is your favorite. But what about UBL? Do you think it comes to a good buy right now?
Yeah, I think UBL also had done pretty well for itself. There was a point in 2020, from those 2020 lows till 2024, that UBL, United Spirits had their fair share of a major price uptrend. Now I think UBL has come back to that 2000 mark thereabouts, and it's also coinciding with the longer term averages, which means that the phase of mean reversion seems to have completed. Radico, of course, I think has done exceptionally well. The stock, I think if I'm not wrong, went up to almost like a 5x to 10x in a very short span of time. And then from there on, the stock has consolidated and then going through a further round of consolidation. So I think at current levels also, Radico could be a good bet. United Spirits could be another stock which could look very attractive. So that's a chart which I believe on the longer term basis has given a very big breakout. There was a point where I think for a period of 2 or 3 years, the stock was stuck into this band of 800 to 1000 odd thereabouts. But I think the moment the stock had managed to break past about the 1000 levels, we've seen a different, kind of a trend brewing up for United Spirits. So that's another name to look out for.
All right, that's the take coming in on some of these alcohol beverages related companies. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We do have our experts with us, and we'll take the discussion forward just after this quick break. Welcome back to Closing Trades. Looking at the markets, it's been a decent recovery from the day's lowest point. Nifty 50 is just down about a couple of points there, and anytime soon we can be in the green territory. And a smart recovery for the Nifty Bank as well. A lot of these sectors are showing a good up move. Definitely the oil and gas space is leading it from the front. But other than that, some of these auto names, especially from the likes of Maruti Suzuki, they are holding well. Some of these paint names are doing well today. Asian Paints as well as Berger Paints, they are gaining anywhere between 2 to 3% right now. But with this, let's take the discussion forward. We do have our guest today, and let's try and find out which sectors are looking attractive at this point in time. And Varun, if you can help us with your take on the paint companies as well. Yes, we do understand that there have been a lot of concern with respect to the new competition coming in from Birla Opus. But other than that, given the kind of fall that we have seen in stocks like Asian Paints as well as even Berger Paints for a matter, 20 to 30% these companies have corrected in the past 1 year. Do you find the valuations attractive? And given the demand prospects, how do you see these stocks as a good investment bet?
So, these are great companies with no doubt, great franchises which have been built, and they have the distribution reach, all that is there in place. But one has to keep in mind that there is some serious competition in the form of Birla Opus which has come in. They also have a significant reach across the country, and that is what is denting their business for now. I don't see this pain to go off in a hurry, so I don't see any reason why one should look at buying Asian Paints or Berger currently. The point here is that till the time we don't have visibility on growth and growth being very strong, these are best avoided for now. I don't see a reason why, even after this 20% correction at say around 45-50 times earnings, still these stocks make sense. Till the time we don't have visibility on earnings starting to pick up or beating estimates. So they would be best avoided in my view.
Okay, best avoid paints for now. But Naresh, what's your reading on the charts? Does it seem specifically, at least for Asian Paints, that the worst could be behind, considering it's one of the worst performers of 2024?
So tough to call if the worst is behind, but it's just that it's fallen so much, there could be a bounce back. That's the case. Any bounce back could take it towards 2450 to 2500 mark. And that could be the zone where one could actually look at selling the stock or reducing allocations. The trend has been broken. So if you go back all the last 1 year, there were multiple times it stopped around the 2600, 2650 mark. In this move, it broke below those levels, the gap. So I would expect it to keep finding selling pressure at higher levels. So an avoidable stock, but yes, there could be some bounce back given oversold nature.
Could be in for a technical bounce back when it comes to the paint counters. But Varun, just a day away from the IT earnings kick starting, and bellwether TCS will be reporting its numbers. But this time what we are given to understand that a couple of these large cap names from the likes of say HCL Tech and Infosys, they're expected to narrow down their guidance. And even when we look at the lower end of the guidance, that is expected to be a little more comforting in a sense. So any stock that you wish to highlight where you have your eyes on, or your brokerage firm has your eyes on, and the expectations are on the positive side?
See, IT sector has been in a complete for the last 4 months. But there's been a sharp rally we have witnessed across the companies, especially the mid caps have done extremely well.
Right. Varun, we've got you on a bit of a patchy line. We'll just reconnect with you. In the meantime, let me just walk you through what are the movers as we speak right now. The markets, by the way, have perked up back into the green. Let's see whether this looks like sustainable or not, and can it last for more than half an hour up until close. It's definitely oil and gas all the way, led by ONGC and Reliance. You've got an Oil India as well, which is looking strong. It's holding up a good 4% as we speak. We were just flagging off Asian Paints. That's definitely perked up quite nicely. And TCS is adding on more weight, about 1.5% higher as we speak right now. This ahead of its earnings come tomorrow post-market hours. Naresh, what's your reading on the charts of Nifty IT? Because they've also had quite a volatile ride off late. And now tomorrow, of course, they're going to all start to react to the numbers when TCS delivers the same.
So the longer term charts are interesting for the Nifty IT as well as a lot of IT stocks. In the short term, given that it's been one of the best performers from the June election lows, the IT index is up 20-25%. and a lot of stocks have done really well. The mid cap side looks a little risky. There could be sharp corrections if there's a disappointment in numbers. The large cap side, TCS, Infosys still look very interesting on any sharp knockoff on the numbers. Infosys would be the top bet. That looks like a 3-year breakout in the making. So that would be a buy on dips to 1850 or a breakout about 2000. TCS closer to 3850, 3900 is a good buying zone.
TCS may enter in a good buy zone, but if you can help with your take, Naresh, on stocks like Shoppers Stop as well as Phoenix Mills, these stocks are doing pretty well today, and after a while, actually, I'm seeing a gain of almost 5 to 7%. Anything different that you are spotting when it comes to the technical parameters, or is just a bounce back that the traders are maybe playing with?
Stop has had a lot of false starts over the last 1 year. The stock went up to 850, 900 couple of times, did not sustain. We are back to 550 to 600 band. This is where it was in 2018 as well as in 2014-15. So the stock has had a 10-year zero return. So out at current levels, looks like a good entry point. There have been a few blocks also over here. So it could be an eventual bounce back going forward. So for now, expecting it to hold above the 550 mark and head up towards 750 slowly and steadily. So looks interesting if one has a little longer term view. Phoenix Mills, on the other hand, is now getting into a consolidation after a slow and steady uptrend. So that would be an avoid.
Then that's the take coming in on both of these names. A decent move in today's trading session. But with this, let's also start taking the closing trade from our experts then. And Naresh, if you can help us with what are you looking at this point in time? Any stocks on your radar?
So that would be one from the oil and gas space, which is GAIL India. The stock has corrected from 245 down to 185, 190 levels. This is where it made a bottom on June 4th. So the stock has gone nowhere. This is where it was in February also. So looks like a good entry point for a bounce back. Would keep a stop loss at 189. Expect a bounce towards 200 in the next couple of sessions itself.
Okay, that's a buy coming in on GAIL, and clearly oil and gas seems to be the flavor of the day. Kunal, what about your closing trade ideas?
Yeah, I'll go with the band Bajaj Finance. In fact, one of the sector which has been starting to look very attractive is the financial services space. So I think there are a lot many stocks within the pack which is looking attractive, and they've come back into a more of a recovery mode. So I think Bajaj Finance could be amongst the stronger and the more formidable names. The stock is on the verge of a breakout, just around that 7,500 mark. So we'd look to bet on the stock on the closing basis.
Okay, that's a buy on Bajaj Finance from Kunal and a buy on GAIL from Naresh. We're going to take a very quick break on that note. When we come back, we'll continue our market chat with Varun Sabu too. Back with closing trades right here on ET Now, and UBL, that's the one stock which is, seeing quite a bit of nosedive. It's now down about almost 4.25% as we speak right now. The company has decided to suspend its supply of its beer to Telangana Beverage Corporation Limited. What does it really mean? How big is the Telangana market for UBL? Let me take it across to Sharad and find out exactly that. Sharad?
Well, yes, in focus is United Breweries, and the company has decided to suspend its beer supply to Telangana Beverages Corporation Limited. Now, in exchange filing, they have stated two rationales for this. The first one being, of course, TGBCL has not revised the basic price of company's beer since 2019-20, and also the second rationale is that there is a significant overdues remaining unpaid by TGBCL for the past supply of the beer by the company. Now, what does this mean is Telangana state would be a major loser when it comes to the short-term excise revenue, and incidentally the latest figure of dues from the Telangana government or this corporation is not known since July 2024. The company had said that they owe roughly 900 crore odd rupees, and industry overall owes around 5,000 crore rupees. Now, as per analysts, two important things has come. Telangana state contributes roughly 15 to 20% of the total volume for United Breweries, and that's a big pie. Also, earnings contribution is coming in roughly 10 to 12% from the Telangana state as well. LRI in its recent flash note also stated that any positive action by the state government within coming 3 months shall reward the company with a price hike coming in the peak season going forward, and also a prolonged supply suspension for more than 3 months may significantly impact its competitive positioning in the state as well. So that's important news flow coming in from the analysts as well.
Right, Sharat, thank you so much for getting us all those details. After this particular news, we have seen knockoff around 6% on this particular counter. But Varun, help us with your take as well, because Telangana as a state contributes significantly in terms of the overall volume, as well as the earnings contribution is around 10 to 12%. And some of these reports are highlighting that any positive action by the state government within the next 3 months shall be rewarding UBL in a favorable manner. How do you see this news, and do you believe that going ahead there are some chances of reversal of this particular decision that has been taken now?
See, honestly, it is very difficult to comment as of now, but it doesn't make sense that this thing prolongs for too long. Logically, if so, it is a lose-lose for both of them. Eventually, I think there will be there should be some positive coming around here, and things should get sorted. I don't see this issue continuing for long, in my view.
Shouldn't be a lingering issue. That's the word coming in from Varun. Varun, good to have you on the show. We'll let you go on that note. Let's welcome on board Sunil Subramaniam as well and find out how he's bracing for the month of January and, of course, the calendar year. Sunil, hi, afternoon. Good to have you on the show and speaking with you for the first time this year. So wish you, New Year greetings from all of us here in the team.
Thank you, and wish you all the same.
Right. Sunil, what's your anticipation about how the earnings season is going to pan out? And first up, of course, there's going to be IT kickstarting with TCS tomorrow.
So I do expect that the earnings season will be better than the previous earnings season, right? But a lot of that is probably in the price, in the sense that the excessive valuations got corrected with last time's earnings disappointment, and what has just come up now would create a smaller gap in the valuation. But I would still say valuations are not going to be cheap. So in the earnings season, I think it's the guidance which probably takes precedence over how the quarter by has gone past. So I would say the guidance will give a clear direction, and I'm expecting good guidance from IT, for example, from pharma, those both being external oriented. Banks are going to be a mixed bag, but I would still back them in the sense that I would say that any revival, either in consumption at the high end or in capex, has got to be supported by banks. And I see a very strong BFSI from the other side of the balance sheet, the savings investment pie. So I expect wealth management, AMCs, insurance broking, them to reflect. The 25,000 crore SIP book should lead to higher fees for all of these players, and some of that should reflect in the earnings numbers.
All right, that's the take coming in on the IT space. But moving on, let's shift focus to an ET Now exclusive then, wherein we learn from our sources that government may be looking to announce safety regulations for heavy vehicles. Move, of course, largely aimed at reducing the number of road accidents in the country. Let's go across to my colleague Samir Dikshit for more details on this one. Samir?
So amid the rising concerns of the road safety, now the central government is looking to come up with the new norms for the road safety. The Road Transport Ministry is looking to install 3 safety devices in the heavy vehicles. And these 3 safety devices include, the first one is the electronic stability device, the second one is the emergency braking system, and the third one is the drowsiness safety and the alarm system. So these are the 3 safety devices. So when it comes to the drowsiness safety and alarm system, so this helps and it stops the dozing driver to keep off from the wheels. So they, in a drowsy condition, they won't be able to drive, or there will be an alarm that will pop up, and this will help to driver to regain and control the vehicle. So that's the safety device. And the other 2 devices as well, they are will be installed in the heavy vehicles to control the vehicle in a very uncontrolled situation, or when the vehicle goes beyond a specified speed limit. So these are the 3 safety devices. Currently, the active consultations with the stakeholders, it is going on. The ministry is consulting with the stakeholders. But interestingly, what we are picking up from our sources, that this consultation is almost at the last leg. A draft notification is likely to be issued by the ministry maybe within 2 months, and then this new norms will be introduced. And government is looking to make it mandatory that the heavy vehicles manufacturers in the coming months, they will mandatory install these 3 safety devices. And with this particular step, the government understands that they will be able potential to reduce the road accident, specifically where the heavy vehicles are involved, and this will also help to improve the scenario of safety for the heavy vehicles driver as well.
All right. Okay, just stay with us, Amir. The other important development coming in for railways as a sector is that, they're all set to be a big relief for stocks like BHEL, Titagarh Rail Systems as well. The issues pertaining to Vande Bharat sleeper train contracts will finally be resolved is what we are understanding. Samir, what more do you have on the same?
So that's a very interesting development. This involves Bharat Heavy Electricals Limited. This involves Titagarh Rail System and also Indian Railways. Now the entire story is related to Vande Bharat sleeper train, which is a sleeper-based variant of Vande Bharat. The country has been waiting for this particular and the new aged train for so long. And Railways is also looking to aggressively introduce Vande Bharat sleeper-based train on a long-distance journey. And for the same, the tenders were issued and a contract was signed by BHEL, Titagarh Rail System. They formed a consortium and they signed a contract with the railways in the year 2023 to manufacture 80 sleeper-based Vande Bharat trains. They were supposed to manufacture 80 trains, and the price of each train was rupees 120 crore. Now there was an issue that Indian Railways or the Railway Ministry wanted that 24 coaches based train should be manufactured. So the entire train set should have 24 coaches, whereas initially the discussion was that only 16 coach based train set will be manufactured. So this led to a long pending sort of a discussion between the consortium led by BHEL and the Railway Ministry. But now what we are picking up from our sources that the entire issue has been resolved. Two things that has been settled, that yes, the consortium will manufacture 24 coach based train set. The Vande Bharat sleeper train will have 24 coaches, but yes, there will be no cost escalation, no additional cost will be given to the consortium, no price revision. Second is that yes, a relief has been given to consortium. Initially, the contract term mentioned that they have to deliver their trains by year 2029. But with this sort of ongoing issues, now they have been given an extended timeline. They have been granted an additional around 3 years of time frame to deliver these 80 trains. Now this is important because BHEL has also been looking to manufacture and show their capacity in terms of the train manufacturing and the technical capabilities, and this will help BHEL to get more contracts from the Railway Ministry in coming years.
With this, we'll let you go on that, and thank you so much for getting back-to-back two exclusive for us, one from the commercial vehicle and the auto space, and the other one from the railway sectors, wherein Vande Bharat sleeper contract issues have been resolved, and BHEL as well as Titagarh Rail are expected to be key beneficiaries of the same. But talking about the auto exclusive news flow, wherein emergency brakes are expected to be installed in all these commercial vehicles, and that's actually going to be interesting, wherein road safety has been one of the key concerns and the ministry is keenly looking onto that. Kunal, if you can help us with one of the key suppliers of these emergency brakes in India, and that is Bosch. Definitely looking at the product portfolio of Bosch, this is a very minuscule in terms of their contribution. But other than that, only on the technical front, how do you see the setup? Because what I see that the stock has been recovering from the day's low.
Yeah, it's been recovering for the day's low, and also I think it's not been one of the few stocks which has fallen very sharply over the last 3-4 months, because there was a point where many of these auto anch names, they had fallen by a margin of 30%, 25% broadly in the span of the last 3-4 months. So it seems like that the stock is just going through a natural process of a mean reversion. So 3-4 months back, I think in the month of September, October, the stock was trading at 36,000, 37,000 levels. It's now come back to that 33,000 mark, which is just about a 10% to 15% correction for the stock in this kind of a time span. So I would believe that potentially the stock would start to look a lot more attractive at current levels. We would also look out for this that the stock which is now trading just marginally below its longer term moving averages. I think even if it goes into a time-wise consolidation over here and not a major price correction, that also could probably indicate that this could be a stable territory where the risk reward would start to look very attractive.
Okay, that's that on Bosch. Sunil, what is your own sense? How is it that you marry and play as an investor the entire tech advancement that one is seeing in autos?
So I think that you've got to look at it that in the commercial vehicle space, if they got to introduce these things, it's going to be an additional cost. Now, in the demand cycle, unless the capital goods cycle pick up and heavy vehicle movement picks up, would they be able to pass on these costs, which are going to be mandatory from a government regulatory perspective, onto the product price? So then there could be a shrinkage of margins there. So one has to be very careful on the timeline of this implementation and how far if the implementation comes at a time when the CV vehicle industry on a rising trend, then the pass can be picked up. That's the good. But for the suppliers, like you mentioned, one of the companies there, Bosch and other suppliers, obviously it's good because it's a mandatory sale happening. So there's a regulatory profit that's coming to them. So I think it's a balance between the auto component supplier here and the ultimate product. And because it's a cyclical industry, right, the timing is very, very critical in terms of when these regulatory things come into force. So if they come in a boom time for the CV industry, then I don't see that can easily be passed through. And overall, this is good for the health of the country from a road accident perspective. So obviously, it's a welcome step as a country, but from a stock specific, you've got to be careful about who's going to bear the ultimate cost of these safety measures.
Certainly, Sunil, because the commercial vehicle industry of late has been doing pretty well for itself, while the hopes were really high in the mid of 2024. But in the second half specifically, we have seen all those hopes fizzling out. But one such stock that is seen to be under pressure today is indeed Paytm, because it's UBS that has flagged off in a note where NPCI data suggests no UPI share gain in the month of December coming in for Paytm, when Paytm's MTUs fell nearly 100 million at the start of 2024 to 68 million by the end of September 2024. The stock is almost at the day's lowest point. And Kunal, we did discuss about Paytm at the start of the day, and look at the move in Paytm right now, close to that 900 mark. Where do you see the stock headed?
Yeah, and I maintain the view that the stock is completing a mean reversion phase, so there should not be trader should not be in a hurry into buying the stock, irrespective of what the last 3-4 months or the last 2-3 quarters have panned out for the stock price, because there's bound to be a point where the stock gets into a time correction as well as a mean retracement or a price retracement. So I think we are now starting that process for Paytm. My only concern is that if in case the volumes start to accelerate or increase rather, for the stock on the way down, then the intensity of the selling could be a lot more bigger for the stock. So I think that we'll maybe come to know over the next couple of days. But as of now, I would not be in a hurry to buy the stock at current levels. Yes, the longer term chart structure is quite positive. The stock has recovered from those 350, 400 levels to almost 1000 plus. But then at 1000 odd mark, the risk reward was not favorable to initiate a buy. Expecting the stock to correct towards at least 850, 870 mark, that could be maybe a good starting point for someone who's missed out earlier.
Quite a bit of fall on Paytm, down about almost 904 points as we speak right now. But Kunal, what about your closing trades or rather BTST trades?
Yeah, so I'll go with a few large cap names on the BTST side, and the first one is ONGC. It's been a fantastic last 2-3 days for the stock, again on the back of much higher volume. So expecting this trend to continue. 285 is a target for the stock, and stop loss to be kept at 264. And the second is about Tata Motors. I'm going a bit contra over here because the stock is trying to challenge this 800 mark, and if potentially the stock breaks past about this 800 level, this could be a swing breakout. So expecting the breakout for Tata Motors would be an anticipatory buy. Targets of 825, stop loss at 775.
All right, so those are the two BTST ideas coming in from Kunal. And interesting to note about Tata Motors, because just after any quarter ending, we do expect to hear from the company on their JLR updates. Believe that could be in a couple of days. So all eyes on that as well, because a couple of these brokerage notes are sounding positive and hoping for a good number. Let's see what's in the store. But Naresh, help us with your BTST ideas then.
So first is a buy on Gale India, which can be a bounce back candidate given the correction. Stop loss at 189, target price of 199. Second is a buy on Industars, which has been making a base around this 325, 330 mark. Stop loss at 330, target price of 340.
All right, those are the two calls coming in from Naresh. Buy on Gale as well as Industars is looking interesting at this point in time. But let's take a stock of what the markets are up to just 15 minutes or so when we shut shop. And Nifty 50 is almost getting ready for almost a flattish close thanks to the kind of recovery that we have seen from the day's lowest point. Almost 180 points is what we have recovered, and 23,700 could be the next level to watch out for when it comes to Nifty 50. While for the banking index, yes indeed, some pressure does persist. 370 points of cut is what we are seeing. TCS is seen to be inching higher, 2% gain coming in on that particular stock. And other than that, Wipro, even one of the laggards in the IT space, is seeing a good day today. So is HCL Tech, up around 1%. But within the oil and gas space, Sunil, if you can help us with your take, because if we look at the earnings then, in Q2, there was a big disappointment rather from stocks like HPCL as well as BPCL. And since then as well, all these counters have done nothing actually. But looking at the valuations, and this time the analysts are building in for a decent set in Q3, will you be a buyer of any of these OMCs at this price?
Not yet, because I think overall in energy, see, China is a big factor in the prices, and energy is a part of global cyclicality. It's not just domestic. So I think we got to be consciously aware that unless there's a strong recovery in China, the energy pack is not going to go anywhere. The second is within that, the oil specific thing, OPEC has not succeeded in really getting production cuts to keep the price holding. With Trump coming on, and Trump's been very clear that he's going to pump more oil, he's probably going to reopen a lot of shale gas closed wells, and so oil supply is going to be quite high. So I see oil prices very stabilizing, and for these companies, as you know, the refining margins are linked to the landed price of oil. So to that extent, I think a flattish kind of a period for oil I see in the coming months. From that point of view, I wouldn't expect any great news. Yes, compared to the disappointment of the last quarter, it might be better, but still, I would say it's not a buy signal for me for this pack yet. I would wait and watch.
Okay, that's the entire oil and gas play, and Sunil's take on the same. But here's another ET Now exclusive, and we understand that insurance companies have shared their views with the industry regulator IRDAI over possible changes in goods and services tax in policies. Insurers are now in favor of a cap of 12% GST, along with keeping benefits linked to input tax credit for health insurance premiums. Input tax credit is a levy which is placed on, to offset mechanism that allows insurance to lower tax liability. Anurag Shah, my colleague, is here with further details on the same.
In December's GST Council meeting, decision on insurance premium was deferred, and Finance Minister Nirmala Sitharaman said IRDA will provide crucial input on this matter. So IRDA asked insurance industry to send their suggestion on the GST rates on insurance premium, particularly on health insurance and term insurance. And as per our sources, insurance industry has submit their suggestion to regulator IRDA, and insurance companies and insurance industry is in favor of passing off any reduction of GST to the policy holders after the adjustment of input tax credit. So insurers want reduction in GST rates on health insurance, term insurance, but they want input tax ITC benefit also can be availed by the insurance companies, and therefore only insurance industry is against the exemption of GST on any segment, and they want especially in a health insurance premium, insurance industry is in favor of reduction of GST from 18% to 12%. So ITC benefit can also be availed, and if GST is exempted on any segment, then insurers will not be able to avail the ITC benefit. So suggestions on this issue has been forwarded from insurance industry to IRDA, and this again is likely to be taken up in a next GST Council meeting. Group of ministers has already suggested about exempting senior citizen premium and term insurance premium, but now GST Council to take a final call after IRDA's input.
Right, Anurag, thank you so much for getting us all those exclusive details, what the industry participants are highlighting and what are they wanting at this point in time. But Sunil, if we can quickly have your take on the insurance pack, because just in the last GST meeting, yes, indeed, there was a disappointment coming in. But do you believe that it's just a matter of time where GST could be taken away or some relief could be in for all these companies? And given the kind of improvement in the insurance data, what we are seeing, because I was just reading a report wherein the general insurance has actually done pretty well, and it was some of these private companies that have done well for themselves when it comes to the December data. What is your take on the insurance pack?
I think that the levy that came on the GST a few months ago, I think it was not received well by overall, because it's something that hurts the middle class, because the companies would pass on this GST cost to the premium payer. So from that point of view, I think the government, although, but in the GST, the government is not the sole decision maker. The group of ministers, the states, all of them are involved. But I see that given the way the middle class gets impacted by this, and given that insurance penetration is very key for our country in terms of the rising, hospitalization costs and everything. So I think that this will move favorably. Timing of it is next GST Council meeting, and then they will take place. But I'm positively inclined that the government would be supportive of this measure, provided the rest of the states support it. See, the problem here with the states is that they are revenue hungry, and wherever they see ability to get a wider base, which is typical with insurance, they are hesitant. But I think overall better sense should prevail, and I think there will be some relief from the GST Council at the next meeting, and I think that's a good thing to look forward to.
Other than the GST Council meetings, of course, Sunil, wanted to understand what your anticipation and expectation from the budget is and how it'll try and become a catalyst for growth.
So I think that this time the budget is going to be a more balanced one. For the last few budgets, the effective thing has been capex, capex, capex. And last year, the government has found that whatever they projected as capex, they're not able to spend, either because their own attention got diverted or because of the fact that sufficient this thing was not there, the impetus in the economy. And they've realized that consumption is getting hurt, partly because of high inflation, but also because consumer sentiment has not been very positive. So I think this budget is going to probably devote a greater deal of attention to improving the sentiment among the larger middle class and the bottom of the pyramid towards consumption, because only when that picks up, ultimately private sector capex will pick up. So I think that this time, based on a lower base, I don't expect the government to end up spending the 11 lakh crore of capex. So there'll be a lower base on which the government will still project a good increase in capex, but they will allocate a far greater amount to consumption. They'll put a lot of it under developmental populism, that which helps create some jobs as well as populism. And so this developmental populism as a tilt is where I would see the budget headed. And that, if that is pulled off, because fiscal deficit wise, if you see what the data up to now, November, the government is very comfortable on fiscal deficit. GST collections and income tax collections have been good. So to that extent, without suffering on the fiscal side, the government is probably going to reallocate a little more towards revenue and a little less towards capex from a percentage growth perspective. If they pull off that, magic trick, right, then it's good, because the consumption will support the short-term recovery of GDP and the capex will support through the longer term through the multiplier effect. So I think it's an interesting budget where you will see a balancing, because they have to keep in mind the three stakeholders there. There is the larger Indian population, middle class, which is a stakeholder. Then there is the FII stroke rating agencies, who are a big stakeholder. And the third, of course, is the government's own desire to push reform and capex. So balancing all of these three in a very nice way is a very eagerly anticipated budget for me. Because, mind you, where I see this change happening is because the government has learned the lesson the hard way. All this focus on capex over the last few budgets, ultimately when it came to the parliamentary election, GDP growth does not translate into votes. Populism is important, and that they realized. They course corrected for Haryana and Maharashtra. And so with UP and Bihar elections also in the pipeline before the next general election, that government will now make sure there's adequate bottom of the pyramid related populism measures also built into government programs. So I'm very keenly looking forward to how the government blends this in without it being seen as a fiscally profligate budget. So it's a very, very nice balancing act in Nirmala Madam's hands this time.
We are keenly looking towards the budget, but Sunil, that was great to have your take on the budget expectations. But looking at the markets, then it's Apollo Hospitals that is now trading lower by 4%. And I do remember that just the day on Monday where we were just discussing about the rise in the cases, or rather the first cases being detected on the HMPV virus in India, that stock was one of the gainers in Nifty 50. Seems like a bit of a profit booking coming in on that particular stock, since in the past 2 or 3 days there's been no incremental increase onto the numbers. But Kunal, just on the technical front, since this stock hasn't participated much in the selling that we have seen on the benchmark indices, do you believe that there's been a change in the structure of Apollo Hospital, and is the stock maybe in for some more weakness?
Yeah, there seems to be a change of guard for the stock, because earlier the stock was looking attractive. In fact, yesterday or day before, it was almost at a multi-week high in terms of closing basis, where the stock closed at 7,400 short levels. So today seems to be a big turning day for the stock on the downside. It's managed to come back now towards a multi-week low if it closes at the 7,100, 150 mark on closing basis, and this could probably be a strong indication that the trend is going through a sudden reversal or more of a knee-jerk price action. This could probably lead the stock maybe even fall back sub 7,000 mark. So from a trading perspective, I would expect at least another 150 to 200 points correction to the stock.
Okay, that's that on Apollo Hospitals and the kind of fall that it's having. We've managed to recover lost ground today. Didn't quite perk up in the green, but at least managed to recoup the losses intraday. But Sunil, good to have you on the show. Kunal, Naresh will let you guys go on that note as well. And I'm going to hand it over to Snehi for the closing ideas and trades.
Well, absolutely, Asha. Like you mentioned, we have managed to recoup a lot of the losses that we've seen in the initial half of the trading session today. We are still under the 23,700 mark, but we are very close to that. Remember, we've fallen to the 23,500 levels today. So from the day's lowest point, at least we're up a good 180, 200 points from the day's low where the Nifty was at. Nonetheless, Nifty continues to trade under a slight bit of a pressure. Sensex following suit, very, very flat moves coming in, but above the 78,100 mark on the Sensex. What did not do well at all absolutely today was the broader markets, because more than a % cut coming in on both your mid cap and small cap. Mid cap lower by 1.1% and small cap taking it on the chin, underperforming the entire market today. 1.7% steep cut coming in on some of the small cap names. On the back of that, the small cap index is also lower. Advanced decline ratio very steeply in the favor of the declines today, so that's something that did not do well for us. However, on the flip side, India Wix managed to slip lower by another % and a half or so, so no complaints on that front as well. Some of the Nifty gainers today, the top Nifty gainers continue to be ONGC. Remember, after that 4% spike, ONGC was higher by another 3% today. TCS on the back of its earnings tomorrow. We're going to be kickstarting the earnings season tomorrow, and the first Nifty company to do so is going to be TCS. So watch out for how TCS acts in tomorrow's trade. But today, nonetheless, 2% uptick coming in. You have IREDA also that will be coming out with its numbers from the broader markets tomorrow. So we'll be also watching out closely for how IREDA will do. And almost a 2% uptick coming in on IREDA today as well. You had Reliance on the back of a couple of upbeat brokerage notes coming in. 2% higher was where that stock is at. ITC also on the back of brokerage action coming in. A 2% uptick on that front. Asian Paints recovered very smartly in the latter half of the trading day. Roughly 2% uptick. Dr. Reddy's also on the back of a brokerage note coming in. We'll be taking you through all of these in detail. However, on the Nifty 50 side, what did not do well was Apollo Hospitals, Trend, Shriram Finance, Ultratech Cement and Bajaj Auto, all trading with cuts of 2%. If you take a look at sectorally what did well and did not do well, remember yesterday IT was the least sectoral loser. Nifty IT continues to be the top gainer today. 0.6% uptick coming in on Nifty IT, of course, on the back of the TCS numbers tomorrow. LTI, Mindtree, Wipro, LNT Tech, HCL Tech, all of these stocks have done pretty well. Nifty FMCG also managed to close in the green, so good moves coming on that front, held by ITC. Colgate has done well, Dabur, Tata Consumer, Britannia, Nestle all seem to have recovered in today's trade. What did not do well today was the entire pharma pack. That's your top sectoral loser in today's trading session. Aurobindo Pharma, Ajanta, Granules, Glenmark, all of these have been tanking away. But if you have to take a look at some other losing sectors, then PSU, banks, metals, Nifty Media, Realty, Auto, Energy, all of these are your sectoral losers in that pecking order from most to least. Let's talk about some other stocks that were in focus in today's trading session. United Breweries, they announced that they have stopped supplying to the Telangana state their beer. So on that note, that stock was lower by roughly 5% or so. You had a couple of other stocks that were in focus in today's trading session as well. You had the likes of Sobha on the back of weak Q3 updates. That stock was tanking away. Nuvama on Dr. Reddy's, so that's the reason why Dr. Reddy's was in focus. They've upgraded the stock to a buy rating, so Dr. Reddy's was in focus on the back of that. A couple of brokerage notes also. You had Reliance, you had the Auto Pack, you had the Cement Pack that was in focus. Multiple channel checks and brokerage notes coming in on the back of that. A couple of these stocks and sectors were in focus. But that's how we're wrapping up for the day. 23,675. That's how we're shutting shop for the Nifty today. Very flat, but nonetheless, we've managed to recover most of our losses today.